John, liquidity slash narrative review of today's price action, February 10th, Tuesday, New York AM, obviously. This is gonna probably be the most important aspect of trading because oftentimes execution is blamed on just models and such, and then it just gets it gets very misunderstood why something is losing and why something is winning when low time frame it just looks so similar and you just can't really identify your losses. This will be your key to profitability and just switching that issue completely off. Narrative is the story behind everything. You should always have a story for your stop loss, your take profit, your draw on liquidity, your targets, etc. High time frame significance is the most important thing, and we're going to be analyzing today's as an example. Okay. So starting off, right, I'm going to be telling you guys to just try to keep it simple. Okay? Try to keep it simple. Don't do too much if you're not really understanding. People at first you can get very very distracted and just very lost in your narrative and just create so many assumptions that you don't even know what's going to happen. So that goes into my other thing. Assumption plus confirmation equals how significant it is. So while your brain is playing out all these different scenarios, how it can sweep this, go higher, or sweep this and then continue bearish order flow, etc., we can reverse off of this retracement, off of the equilibrium of the bearish swing, and then go down for preview week low. You can have so many assumptions. At the end of the day, no one knows what's going to happen. How you trade or how anyone trades is stacking probabilities. That's what makes you profitable. Any number of things can happen, but the more conviction and confirmation that you can stack onto an assumption slash idea, that is how you identify how significant your trade idea is and how you will be successful. So, yes, create so many assumptions, right? Create assumptions because this avoids marriage. What do I mean by that? It avoids marrying your bias, and it just keeps you more open. A lot of the time you want to be neutral. You always want to be leaning bearish or bullish or completely neutral, but I suggest you always lean somewhere. However, always have assumptions. How can I lose here? How can this lose? Or how can we flip? What are the likelihoods? And accept that risk going onto the trade. Accept that you can lose and how you can lose and how probable it is. It might be low. It might be a 10% chance. It might be a 5% chance. It might be a 50% chance. But always keep your options open. So assume and create ideas, but not too much to where the point that you're just getting lost in your own fucking sauce. You know what I mean? Because at the end of the day, have assumptions with confirmation. Be patient. As soon as you have that confirmation, that equals how significant that trade idea is. I could have 1,000, but only 5 have likelihoods of playing out due to how price is moving. Be adaptive. Be reactive. Let the market tell you what it wants to do. Don't come in with ideas don't come in with a set in stone idea, and don't force it either. That's why you wait. You gotta be patient. So this is just an overall John liquidity video, I guess, but it's gonna serve as a nice foundation to get started, right? So I'm gonna be releasing everything that I'm putting. Okay, hold up, guys. There we go. So, right, keep it simple. One of the questions that this is the daily time frame, by the way. This video is gonna be at the most extreme highest time frame. Next video, then we're gonna cut and go into the medium, still high time frame, 4 hour and stuff. But right now we're gonna be analyzing daily and weekly, super high time frame, right? Super significant. I'm a scalper, and it's super significant. So I ask myself, what do we have above, and what do we have below? It's literally that easy for now. Okay. What happened? So we were bullish, right? We were so bearish even on ES right here. We see how bearish the daily was looking, right, attacking these lows, these swing lows, right? We can see exactly where price was and what we swept, which was this and which was this swing low. This swing low was SMT'd. Or no, we both swept it on both. And so this low right here, this this weekly low, this previous week low, was like a very strong draw when we were so bearish, right? But when did we start reversing and why? We started reversing on this point. Why? Because below we have a gap holding that bullish order flow, right? That we just reversed off of and respected. What do we have here? A gap. At the same time, we also have just a very prominent intermediate low. It's an intermediate low, a swing low, a liquidity sweep. A very prominent liquidity pool inside a time frame gap. Super, super significant stuff right here. So what do we have below? High resistance. Very not likely to get swept. So we just have high resistance, protected lows. Yes, no. So on this previous week low, with lower time frame, like still high time frame significance, like the 4 hour and stuff, we are respecting bullish, disrespecting bearish. I mean, respecting bullish order flow, disrespecting bearish order flow. So it's just very, very not likely that we will be getting this previous week low. Still can happen. It's just an assumption, but our confirmation is telling us otherwise, right? It's kind of what I get into right now. We can tie in other concepts, even on the super high time frame, like the fact that since we sweep this out, right, this makes kind of like a market maker buy model. And even if we match it up with standard deviation, the -1 range is around this swing high. Is this an assumption? Yes, still not confirmed, but it's nice to see that if we can get up here, we can trade up here or trade down, because after that -1, we obviously are going to retrace this overextended leg. So we can short to rebalance the range, or we can long to get our draw, depending on what our draw and liquidity is for the day. This is just ironic because this is super high time frame. I think 15-minute and higher is already considered high time frame, but scaling down to the 4 hour, nonetheless, we have this liquidity point right here, which is a super high draw, right? And I'm like super interested. But what happens? This high is actually SMT, right? So you're like, oh, like that sucks. It's already swept, whatever. But honestly, I would still be targeting this, or not targeting, just not showing enough not really that big of significance with this SMT. Why? Because we just don't really get a reaction. I mean, we SMT it and we rebalance the range, go higher Monday, and we are just still in a super bullish order flow. What are we doing? Disrespecting bearish gaps and respecting bullish gaps. Sure, we can. Basically, the only bearish scenario we can have is by rebalancing this range and going to a more discounted gap. So if we draw like our EQ of the range right here would sit around this area, maybe retest this gap, but most likely retest this gap and just kind of just go down here, rebalance the whole range, right? And then that maybe could be our sign of reversal. We could respect that and go higher, etc., etc., etc. Go down to this previous week low or just get the swing low. But right now, we just gotta see what's confirmed and what's significant. What's significant? The fact that we swept out this high time frame and we reversed. What's the confirmation? The fair value gap, bearish fair value gap's getting disrespected, bullish one's getting respected, right? Okay. We still want to find a reason to trade higher than this point, because at the end of the day, it is SMT'd. Even though we're not really reacting to it, it is still. So what do we have? We have all these generated um, swing highs that we want to see this market maker buy model finish or sweep out, right? We can obviously see that when we sweep that, it looks very clean. So we're just still on a bull run. What am I targeting? We can target this 4 hours inefficiency that we can still rebalance. So far we just have reasoning and confirmation to go higher. And let me see if I can find something else to talk about. Yep, I'm going into the session just leaning bullish. I don't really want to be shorting unless unless maybe we like inverse this gap completely and we get like a continuation short. But no, I don't think so. Yeah, I was just leaning bullish, maybe to rebalance this whole range like I said. But yeah, this was my draw. I obviously like mark up a lot more things, but I just like to like still see what's in the overall vicinity on the low time frame since people can zoom in. Okay, so going into the session, we're gonna be going into daily profiles right now. Not even on the trade day or anything. Indicators called kill zones and pivots. It just marks out the sessions, session highs and lows and stuff. Pretty nice. So what happened? Scaling even further down. We tap into the 4 hour that we want to continue off of, right? We tap into it. We don't really get that strong of a reaction, but we do respect it. I want to see going into session respect the CE of the inefficiency, but we kind of just range. London's like, I guess, sweeps this out. Whatever. On ES, I think these previous session highs are still intact. Yes, by the time session is open, these London highs and these previous session highs are still intact. So the high of day is still intact. We got news data lows, data level lows, and going into New York session, I want to see like us break out of this range, get nice manipulation, just go high because we are at the end of the day, we are rejecting these highs, right? What's above and what's below? What's below is just protected levels and by inefficiencies and order flow, and what's above is just swing highs and unmitigated gaps. So I want to either get a go on higher, sweep this and get a continuation off if we just rip after going here, or to sweep all this shit out, completely take out all the LR, and then go higher, which is what we ended up doing and respecting CE of the inefficiency, which was absolutely amazing. Okay. So, as far as draw goes, yeah, I think I'm gonna end the video right here. And yeah, I think that's around where my whole thought process was pre-market. I marked out high of day, low of day, just to add targets left. Because if you see here, for example, we did sweep out London high, but we just left this session high here. Like, we just have generated liquidity and just unswept targets to go later back to, is more of what I mean. Same as to the sell side, that I wanted to see how that gets up before longing. As far as daily profile goes, I'm looking for either a New York continuation or New York manipulation into a reversal, bullish reversal. But in the grand scheme of things, yeah, just longs pretty much. But what could have made me go short? Maybe if we started just running through here, disrespecting this gap, respecting low time frame gaps. Yeah, I also saw that we could have just continued here, respected this gap, and just got a continuation long. As far as shorts go, I think I would have maybe waited for like this gap maybe to get completely inverse, which just looks like it's like kind of happening now. And then maybe I could see to rebalance this over extended range or get this swing low right here. I don't know. I think that's why I would go shorts, but yeah. Yeah, I think that'll do it. I don't want to get sucked into the whole execution part of it. And then next video will be